Expectations are the same one. If you guys have been following this for a while, you know that we're here to show you how we find deals, from how to get the deal all the way to closing, that using our business model. So all the experiences that you guys, all the things that you guys are hearing is direct experience from us. We always like to say every market is different. Please do your own due diligence, and then hold all or any questions that you may have to the end, because there will be a Q&A, and also network with each other in the chat, guys. You've got some VIPs in here. Christy's a VIP, Max is a VIP, and if there's anybody else in there that's a VIP, you guys network in the chat. They're amazing underwriters, market analysis, and they have a really good analyzer that is freaking amazing that Ione created, that they have too. So reach out to them if you need help with any of your deals. I think I saw Cecilia in there as well. Our why, guys, again, if you've been watching this, you know why we're doing this. We're doing this to change the game. We really want to help people get their first deal, or if not, get another deal, because we know what it's like. We know that whenever we first started, we had no one to ask, and the people that we did ask, Joseph put it really good the other day. We would ask them, "Hey, how do we do a deal?" And their response was just, "Go find a deal, and then I'll show you." Right? And we understand that they're busy. You know, they were at a higher level. Time is valuable. But that was the response that we got for the majority of the time. So what we wanted to do is put this series together so that you guys can see what it takes, and what, like, our business model, are the roadmap for you guys, so you guys can go do your own deals, and also help those people who are also trying to do their first deal as well. Our goal is to help someone do their first deal, and then when they do their first deal, then that person can go and help someone else, someone that's new. Rinse and repeat. That's our mission. That's our why. With that being said, guys, it's a smaller crowd today, so we should have a lot of fires in the chat. Are you guys ready to get started?
Hell yeah. I got you with some fires.
Thanks, bro. We got some fires in the chat. There we go. All right, let's do this. Okay. Last week's topic. Man,
It all blurs together
I
in
know,
one
it's
long
all
day.
Last week's topic was the LOI was accepted, and you know what it entails with that. And Joseph touched up a little bit about the PSA and how you negotiate that. But let's say your LOI was accepted and you're negotiating your PSA right now. There's that limbo stage that we like to call the limbo stage, where you're not under contract yet, but you're still negotiating the purchase and sale agreement. That's what the PSA stands for. And so these are some pre-due diligence items that you can do, that you can be proactive before you actually go under contract. And I've talked about this before, but this is important because this will cut your time in half, and you'll just be so much more ready whenever you're actually under due diligence. The first one is engage an attorney. If you have not engaged an attorney yet, you should be, because you're technically in the point where you're negotiating your contract. So you've already have that transactional attorney. And sometimes, in some cases, they do both the transactional part of it with the negotiations. And then the also, if you're doing a syndication model, the securities attorney as well. But you should already have engaged the attorney at this point. Interview property management companies. Remember, this is pre-due diligence. So right now you're calling different property management companies to see which one you want to potentially entertain, and according to your business plan, who is the best fit. Also, you should already be engaging lenders at this point too. If you have not already, this is a good time to get started. Interview potential partners that you think you will need to be on this deal, and talk to contractors if it's a value add opportunity, so that whenever you're actually under contract and you're in your due diligence, you have the contractors ready to go. And then also review the underwriting and the risk capital, right? Because there's going to be some upfront costs that you're going to have to incur when you're doing the deal. So these are some pre-due diligence items that you can do prior to you getting under contract. Once you are under contract, say you've got the PSA, it's executed and it's signed, now is a time where due diligence or some of the terms, actually, let me rewind. Once you have it under contract, hopefully you've negotiated and you understand the contract before you sign it. But some of the common terms that we see that both parties agree to, right, are the due diligence and closing timeframes. And that can range, and this could all be different, guys. It can range anywhere from 30 days due diligence to 30-day closing. It could be 45-day due diligence, 45-day closing, 30, 60, or 45, 60 plus. You know, Joseph and I have seen a variety of different due diligence and closing timeframes, and some of them definitely vary depending on the size of the property. It could be less, it could be more, or if you're doing like a loan assumption, you know, that could take, Joseph, what did we see? Like maybe 6 months or something like that, right?
Yeah, HUD loan, 6 months.
Yeah, 6 months on just a closing time frame, guys. So that's why I put 60 plus. Or if it's a seller finance, like straight up seller finance, this closing period could literally be a lot less than 30 days, if possible. I mean, it just depends on what you negotiate. Obviously, the more time, the better. But you know, that would all come down to the negotiation process. But that's the common timeframes that we see in a purchase and sale agreement in the PSA. Can be negotiated, and other contingencies can be negotiated as well. Obviously, talk to your partners and your attorneys to make sure that you have what you need in the contract that protects you and the other parties involved. All right, due diligence. This is the one, Joseph. All right, what is due diligence? For those of you who don't know what due diligence is, this is known as your inspection period, where you can do all of the following when you're in due diligence. You can do a thorough walkthrough of the property, which you should. You have every right to do so, depending on what you agreed upon on the PSA, but it's typically you have access to the property. This is the part where you do your third-party inspection. So any type of inspections that you may need to get done, like a survey, appraisal, phase one, environmental, all those will be done during this time frame. You have a chance to review all the leases, the financials, do any audits that you may do, get insurance quotes, engage the lender if this deal calls for a lender. If it's creative, then you know, take whatever action necessary. And then you're creating your GP table, meaning you're negotiating with the partners that you have in the deal. You're kind of structuring that part out. And also the critical dates checklist that is normally provided by either your title company or the closing attorney, or a combination of both, or maybe the broker is the person responsible for that. But these are this is the inspection period where all this stuff will happen and more. But this is just to give you guys an example of the items that you're going to be going through during your due diligence. All right, so here's some of the overviews that we're going to be, or the overview that we're going to be covering today, guys. A lot of it's going to be a bunch of coordination with the following parties. Either you're direct to seller, or you're a broker, or you're a combination of both. Typically, we take well, I would say we take the broker route, but I think the last two deals we did was direct to seller, right, Joseph?
Mm-hmm.
Yeah. So we were direct to seller, but the one we're working on right now, we're direct to broker. So we're handling it through the broker. You're going to be obviously talking to your partners. You're going to be talking to attorneys. You're going to be talking to lenders if applicable, if it's a new debt or a loan assumption or something like that. Or maybe you're getting a combination of new debt and a supplemental or whatever, that will also be there if applicable. You're going to be talking to title. You're going to make sure that all the requirements that you are doing are met through the title company. Property management is another person that you'll be talking to. And then investors, if you're raising capital. And of course, the vendors for all the inspections that are going on during this time frame. All right, due diligence checklist. And I know I'm covering this kind of fast, guys. Of course, there'll be a Q&A at the end. So if you have any questions, we can answer it there. And I'll go a little bit more into detail on some of the stuff that I just talked about. But the due diligence checklist, what you're going to be doing, guys, during this time frame is you're going to keep track of all the due diligence items and break it down into individual items, and also a schedule. And the reason you want to do that is because you're going to schedule it out week by week during your due diligence. So if you have like a 30-day or 45-day due diligence period, you're going to break down what has to happen on week 1, what has to happen in week 2, week 3, so on and so forth, right? And then what we do is we like to use a spreadsheet to keep track of everything, and we share it amongst the partners so that everyone knows what we're doing, right? So then you'll go over that during your due diligence to check off all the items that need to be done. The checklist will consist of something like this. So let's say you're doing week one, right? These are example items. Week one, you know you're got to get those third-party inspection reports done. So that'll be like week one. You're day one, you're under contract, due diligence just started. This is the point where I told you guys pre-due diligence, you should have already engaged these people. Now it's time for them to get into the property and start doing the reports. You're also going to do your thorough walkthrough of the property. I mentioned that, contact your contractors and have them ready. So if this is a value add opportunity, then this is the point. This is the actual step where you're going to bring in those people with you and you're going to walk the property in detail. I know I had a question before during the walkthrough of I think it was like part 4 or something like that, the initial walkthrough, and someone had asked during that walkthrough, do we get into the attics or crawl spaces? And I said, no, not in that walkthrough. That's just the initial walkthrough, right? During due diligence, then that's the time where you have a contractor go into those spaces and check those out, right? You could, if you want to, maybe if you're a contractor, then sure, go for it. But I don't recommend it unless you really want to just get down and dirty. But this is the time where the contractors will do that, and they'll get into those cross spaces and attics and whatever needs to be checked out. This is the time too where you're actually getting those insurance quotes if you have not already. But now that you have access to the stuff in the due diligence, now your insurance quotes are actually going to start looking more refined and a little bit more finalized. This is also the period where you're going to be wiring EMD if you have negotiated EMD. Typically, it's what we do is a 1%. Depending on what type of deal you're doing, I've seen deals where there's no EMD involved because it's super creative and they're just motivated to get it done. But the industry standard is 1%. And so make sure that whatever your contract says, you get that taken care of. And it's just easier to get it done ASAP. If you're going through a broker or seller, they're going to want to know when are you going to do that, and they're going to pressure you to do it ASAP. So make sure that you are doing that and you're on top of everything. You're also going to be talking to the attorneys, right? You've already negotiated the PSA, so you have an attorney there to help you out to make sure that the whole closing goes according to what the PSA says. And also you're talking to the property management company that you have already identified that you're going to be working with. They're going to be crucial in your due diligence, especially in week one, because they can also go walk the property with you and they can give you feedback real time while you're there at the property. So when you're tracking all these items, guys, just make sure that the way we like to do it is we assign every partner their role on what it is that they're supposed to be responsible for. So we know who is working on what. And also it's a sense of accountability, because when something is depending on you, like Joseph, if I give Joseph a task, like Joseph, make sure that the property management company is okay, that's his role. And that's exactly what he's doing now. So he is on top of it. Every time I talk to him, I just ask him, where are we at? And he tells me where we are, because that's his role. We've assigned it to Joseph.
Yeah, we got an email back, by the way, like 10 minutes ago that we'll discuss after this.
Awesome. Okay, so here's an example of what week 2 would look like. Now you're week 2 in your due diligence. You collect the estimates and the quotes from your insurance, your contractors, if it's a value add or whatever. You have all that stuff ready for you. You're reviewing the due diligence material. This is all the stuff that the seller is responsible to provide you. So like if they are responsible to provide you with the most current T12, rent roll, delinquencies, anything that you can think of, this is the part where they're providing all that stuff to you, and you're reviewing it to make sure that you are on top of everything. You're starting to initiate the conversations with your investors or LPs if applicable. So now you're starting to get those people lined up so you can have those appointments set up with them, and you're just putting it in their ear as you go along. You're also doing your lease audits at this point. This is something that the property management company can help you. That's why I said leverage them big time throughout everything. And then keep track of your critical dates list. Remember, this is a list that either will be provided to you by your title company, or if not, the attorney or maybe the broker, right? But you'll get a critical dates list. And normally what we do is we just make sure that meeting by meeting, we are addressing these items, because this is important. If you do not meet those deadlines, like say you need to do a survey before X amount of time, then you need to make sure you're on top of that, because that could mean some sort of contingency in your PSA that could potentially hinder the deal or make it a lot more complicated. So make sure you're keeping track of those critical dates on that list. And then here's an example of what week 3 items can look like. At this point, you guys should be either finalizing your GP table or very close to it, if not already. So that's something that should be taken care of. Creating the org chart, how the actual organizational chart's going to look like for the whole structure of the deal. You're creating your entities as well, all of your LLCs and everything. And then you're also refining the budgets and the business plan. This is going to be ongoing throughout the due diligence process, guys. But at this point, you're coming close to the end of it, assuming this is like a 30-day due diligence period. And also at this point, if you're coming close to your due diligence ending, this is a time where you reassess and decide if it's okay for you guys to move forward, or if not, that's fine. You can retrade. And if it doesn't work out, where you can't come to an agreement for whatever reason, be okay with walking, right? Because during the due diligence, typically the EMD is still refundable at this point. So if you have to walk from the property, you can still get that EMD back. So don't be afraid to spark up the conversation if you find something in your due diligence walkthrough that you did not account for, nor did anybody account for. Like a big surprise just came up. Okay, then, that could be grounds for a retrade conversation, meaning you're going to renegotiate. Or it can be, if you guys don't work it out for whatever reason, then it's okay to walk. Be okay with that, right? Don't get into a deal that you can't do, right? That's going to be too much work. Be okay with walking. But also it is 100% okay to retrade, right? Joseph, maybe you can touch up on this, on our story on the retrade conversation.
Yeah, I say we've done it almost every single deal actually, but this most recent one, I mean, I don't want to go too in depth of it just because we're currently doing it right now. We're currently still active in the closing process. But we had found something that was totally unexpected, or I guess I shouldn't say unexpected. We expected the worst. The property needed work, but we found something that we did not necessarily put into our budget or into our CapEx plan. We still underwrote very conservative to where we could still be okay, even if we didn't get the retrade. But we're going to ask for that retrade because what they presented to us was not what we found, right? So there was, whether it was intentional or not, it was difference between what they told us and what we actually found out. And when we got there and we found that there was going to be like $300,000 worth of extra work that wasn't accounted for in our original plan, yeah, that's definitely grounds to get that figured out. And if it kills the deal, if we don't get that, then we definitely need to move on or walk away. Or we can ask for that retrade and figure out whether we could just do a reduction of the price or get a credit, whatever makes the most sense and whatever you and the seller can agree to, as long as everybody's happy and the deal still makes sense. Most problems are uh, able to be remedied, right? As long as the price is right. So as long as your numbers look good and your underwriting looks good, you have the right people in place to take on whatever the issue is. I think you just got to plan accordingly and pivot when necessary. Right? That's the best way to sum it up. And one more thing I want to add, not on that topic, but just on the general whole due diligence collectively. This checklist is a guideline. It does not mean that you have to do it exactly as we're showing it to you guys. Let me tell a story. In school, right? When KJ and I were in school, she was always the person, like we would get deadlines, right? For assignments or homework to be done. We would get deadlines. And she was always the one, as soon as she would get the assignment or the homework, she would do it, get it done, knock them all out. And then she would be totally happy the rest of the time, not worrying about it. And I was vice versa, right? I just didn't care. I just didn't do it, right? Until the very last minute when it was due, and not procrastination, right? This is not the thing. You don't want to be a Joseph in that sense on the due diligence. You want to be a KJ in that sense. You want to get it done as soon as possible. Don't just wait to the deadline to do something. Get it knocked out as soon as you can. That's going to help you so much. You're going to feel more comfortable with the deal. It's going to be so much less stressful. That's my best advice I could tell you, is like, this is a guideline, use it accordingly, and do things as quickly as you can.
Agreed. 100%.
Oh,
All right. Let me cut me off for some reason. Can you hear me?
yep. Yeah, I can hear
Okay.
you.
All right. Let me share my screen. All right. Can you see my screen?
Mm-hmm.
Okay, perfect. So like what Joseph was saying, this is just a guideline, guys. This isn't set in stone for sure. These are just some example items that I put on here that I thought were good. But also I did see the question that I think Kim had put. My chat cleared up, but I think she had put a question of
Yeah,
would
I
you
can read it.
spend would you spend the money to create the entities before reassessing? Good question. Again, these are just example items. I would definitely consider the conversation of retrading on like week 2, because I think I went back to week 2 where I collected my estimates and my quotes, and I've already walked it with my contractor. If it's something that I didn't foresee, then I would not justify spending the money to create an entity or entities just yet until I know for sure I am proceeding, because otherwise I'm just spending money that I'm not going to be able to get back. So yeah, definitely reassess as you go along, day by day, to make sure that what you're going to be doing is justified, because some of this money is not refundable. Remember, there's upfront costs that you still have to account for, and creating an entity is something that you can't get back.
Why it's called risk capital, because that money is at risk.
Yep.
Also, on the retrade, the topic of retrade, you can do it multiple times, but we don't necessarily recommend that. We recommend that you get all of your issues that you've gathered, you've found, everything that you've discovered, and have one conversation about the total retrade amount that you need to do. I would not do the retrade and then expect to do another retrade down the road, right? Once you do that retrade, this is what we found out, that the seller is going to typically ask for your due diligence to be over at that point. Not always, but that's something you really want to consider, be prepared for. That they might just say, okay, we'll give you the retrade, we'll give you the credit, but that's the end of due diligence. Your due diligence is now over and your money goes hard, or whatever it is, right? So just be prepared for that stuff and have all of your ammo, so to speak, ready to go when you're going into that retrade conversation, and expect that to be the last retrade conversation that you have on that deal. And I think it was Kim, yeah, renegotiate. She asked, what is the retrade definition? All it means is you're just renegotiating on the price because something came up. You're either something they didn't disclose, or they didn't know and you found a problem. You're just renegotiating the price or asking for credit.
Exactly. All right. So this is week 3 again. Decide, reassess before you continue going through the project. And then if you are talking about the risk capital, I'm going to go over this real quick. The risk capital, creating the entity is considered a risk capital, what Kim had mentioned earlier. Closing costs is something that you're going to have to account for. Acquisition fee, attorney, legal fees, lender fees, escrow fees, third-party reports. All this will be in the underwriting under the sources and uses, and this will be all considered upfront cost or risk capital. Right. So when you're underwriting, guys, this is a guideline of what you're going to be looking at for the risk capital, so you can have an idea once you start getting under contract what you're going to be having to spend as a risk capital. The other thing that I want to talk to you guys for the underwriters here, right? You want to make sure you're starting to finalize your underwriting at this point, because there's going to be a lot of things that you're going to be covering, like the risk capital upfront costs. You should have an idea, or if not, have a final number on what you're going to be looking at for the upfront cost. The debt quote, right? If you are going through a lender, you want to make sure that once you are ready, that rate is locked, because if it's not locked, then that whole underwriting can change depending on what interest rate they finally give you, right? Let's say you were underwriting at a 5.5, and that's the interest rate that they were quoting you. But then for whatever reason, something happens in the market and now you're looking at a 6% interest rate, then that can definitely change your underwriting. So you want to make sure that you are consistently talking to the lender throughout this process if you're getting new debt, to make sure what that rate's going to be and make sure it's locked so you can finalize your underwriting. Also, the insurance is key, guys. I think a lot of us here in the chat know that insurance is way high right now. I think Joseph had mentioned that some areas like coastal were underwriting at like 1,600 a unit or something like that. And so make sure that you have a finalized quote on the insurance as well, so it can be in your underwriting. Property taxes, you should already know this by this point. The property management fee structure is something that you should know by this point too, right? You've already talked to the property management company and you've asked them what the fee structure looks like. So you know if there's going to be a management fee and payroll, or if there's just going to be a management fee by itself. All these things you're going to have to already know so you can put it into underwriting. You have an idea of what your expenses are going to be at this point based on your thorough walkthrough and all the financials. You're also going to know what your CapEx budget is going to be because you did the walkthrough and you had quotes and estimates and everything ready, lined up. So you know what that actual budget's going to look like. You're going to already underwrite for carrying costs. You're going to underwrite for operating reserves, underwrite for the capital reserves. And you're also going to know what those investors look like, because now you have a more refined, finalized underwriting in front of you. And then you're obviously going to know what your exit strategy is going to be at this point. That's probably one of the things that you should know very, very, very at the very start. Anything you want to touch up on this, Joseph?
No, I think you covered it pretty good. Guys, this should not be the first time you look at these numbers. If you see it says finalize, right? You're just making sure that everything is still solid before your due diligence is over. You don't want to have to back out after your due diligence is over, because then you definitely lose your EMD, whether it was hard or not. After due diligence is over, that's it. You just need to go forward. And even worse than that, it hurts your reputation. You're going to be known as the buyer that couldn't perform. And multifamily is a small industry. There's a small group of people, and you don't have a bad reputation at all. You don't, and it will hurt you. So do the best that you can to make sure that you can close on the properties that you put under contract.
Yep,
That's all I got to say.
for sure. And then Kim asked, what has been your experience for the length of time your lenders have locked the rate? 30 days. I would always trust but verify. And if it was me, I would do a longer closing period, and that's what we'll go through on the next Zoom. But I would definitely go through a longer closing period, because I don't think 30 days is enough. It could be if you're very proactive and depending on the size of the asset itself. But I would not recommend 30 days. I would say if you're going to do 30 days, and we can talk about that in the next Zoom, I would add some contingencies in there for extension clauses and financial clauses as well. All right. So the business plan, guys, you are going to be improving upon your business plan and refining it, right? You're going to have hopefully you'll have the finalized operating budget by this point. You'll have the finalized CapEx budget. You'll strategically determine when you can start implementing like the following items based on the lease expiration and when those units are going to be vacant. So like rent increases, this will be something that you can get off your rent roll as you go along. You'll start seeing the rent roll more and more in detail because they'll have to provide you that information. So you'll know when you can start increasing those rents. You'll know when you can get in there or how many units are vacant. So you can start doing the interior or any exterior as well. And this is all for Class C, like value add stuff. You may not need to do this if it's a Class A. You may just need a simple turnover, but you'll start to know the business plan, when it should be implemented, when you can start implementing it, because a lot of underwriting analyzers assume that you're going to be doing day one. And in some cases, you may be able to get there in day one, but we've learned that it's typically not day one when it gets started. So you'll refine the business plan as you go. And also, if you're going to be implementing rubs or anything like that, you'll also be able to know when you can start doing that, because you can't just be the new sheriff in town and like everybody gets rubs now out of nowhere. That's not going to work. It's going to be a tough one for you. So definitely strategize with your property management company to have a plan ready to implement day one. This is something that we're currently doing. We've done before. We strategize with them to let them to kind of just feel, okay, here's what we're going to do. Here's, everything that's expected of whatever, blah, blah, blah. We review everything to make sure that we have a solid business plan ready to go. All right. So we're going to go over the due diligence overview again. I touched up on this at the beginning, and I'm going to go a little bit more into depth. The seller brokers is one of the things that I touched upon. You always want to trust everything that they tell you, whether it's a seller or broker, but you have to stay on top of all the information, all the financials you guys agreed upon per the PSA or whatever you agreed upon on the PSA. Communicate with them regularly, guys. Make sure that you also have access to the property per your agreement, and no questions are off limits. Remember this, guys. You are in your due diligence period. This is the inspection time. You are allowed to ask all the questions that you possibly could think of. Don't be afraid to ask the questions. And if there's anything else too on that part, the communication is key with the seller and the broker. Partners, have those tough conversations up front with your partners. I cannot stress that enough. Negotiate whatever you guys have to negotiate for whatever roles that you guys are bringing to the table or whatever value you're bringing to the table, just so that everybody has a clear sense of what someone is doing in the deal. Again, I cannot stress this enough. Have those conversations up front. Do not wait till after, or do not assume. Have those conversations and make sure everyone knows what they're supposed to be doing. The attorneys, I would say with the attorneys, just make sure that when you are vetting your attorney, hopefully you've already done this in your pre-due diligence. You got a referral, you vetted them, they've done business, they know what they're doing. But I would say this, always double check the attorney's work. Always double check the attorney's work, because even attorneys make mistakes, guys. And we always double check everything that they do. I trust, but I still verify, because Joseph and I have caught stuff in some of the agreements that we've reviewed that it wasn't necessarily the attorney's fault. It was just that we didn't like a certain sentence or verbiage, that we had the attorney change it or review it, and they were grateful for it, and we strategize with our attorneys. So don't be afraid to bring up something in any agreement that you don't understand or you want to change. Make sure that you always double check their work. Can't stress that enough, guys. Don't assume. Again, don't assume. And if the lender is there, if you have a lender that you're working with, I would say for this one, ask from the very beginning what the requirements are going to be from you or your team or your partners, and get that ASAP. Because the sooner you can get all the requirements from the lender and be proactive in getting this done, the quicker you'll actually be to closing this deal. I think Kim had asked about the 30 days. What's been our experience with that? If you're on top of it and you're proactive in getting everything that they need, then yes, 30 days is absolutely doable. Although realistically, I would still make sure that you are on top of everything because they are still, for lack of better words, they work 9 to 5. Okay. So you may be working on the weekend, right? But the lender is not working on the weekend. And so you have to make sure that you are on top of everything that they are needing and get it done ASAP. If they require whatever they require, send it immediately and just knock it out because you don't want to have the lender be the reason why because you forgot to do something or whatever. Just constant communication with them. Always be on their radar. Don't be too annoying, but be just annoying enough where they know that you're going to be following up with them every single, I would say every day. But if you're on top of it, just make sure you are on top of it. The title. This is one of the things that if you're working like in a title state like Texas, right? We go through title companies. Don't assume that the title is coordinating everything with every party, right? Don't assume that they're talking to your attorney. Don't assume that they're talking to the broker or the seller or the lender. You have to keep that communication going and you're the one coordinating with them. Because if you're assuming, and let's say that the title is supposed to reach out to the attorney to get some information, but they didn't because there was some sort of miscommunication, by the way, this happened. That's why I'm saying that. Then that can delay your closing by a few days, if not a few more weeks. So ensure that you talk to the title company and ask them what is it that they need, if anything, right? A lot of times they won't tell you right off the jump until you're actually in your closing period, but it's good to be proactive and asking them because I would ask them, hey, what reports do you need, right? Like, do you need a survey? Do you need a appraisal? What is it? What is it that you need? So I make sure I have that ready for you so that there are no surprises. And I'm not going to let my assumptions ruin the deal because I thought that the title was supposed to be reaching out to them. Guys, you are the one that's supposed to be coordinating everything. So make sure you're on top of title. Oop. All right, property management. This is like property management is super crucial throughout the whole due diligence process. They can help you coordinate some of the inspections and review the leases, which is important. You also should set the proper expectations and ensure that you read and review the property management agreement before you sign it. Of course, go through your attorney on this, but also if you haven't already, which you should, research them and ask them any questions. And if you're still unsure at this point, then I would say, just have a backup if necessary. But also, property management is super crucial during this time period because you're going to be strategizing with them a lot, and you're going to have to ensure you have a strong team behind you. And these are the people that are going to be like your backbone throughout the whole process. So make sure that you are also creating that good relationship with the property management company and make sure you're on top of everything that they do. Oh yeah. And one other thing I was going to say, guys, if property management volunteers to help you out throughout the due diligence process and you guys haven't discussed any fees or any agreements yet, when I say, set the proper expectations, just make sure you ask if there's no agreement in place, if there's any compensation or anything that they expect from you. The last thing you want is for them to help you out through the whole process and you haven't signed a property management agreement and then they bill you for something you didn't expect. So make sure that you know everything going into the deal with the property management company to make sure that there are no surprises. Ask them what they expect from you, and then you set the expectations as well as what you're needing from them. Investors. If you are going to be raising capital from investors, make sure you know the underwriting and you can articulate it because you're going to be talking to savvy investors who will also grill you, especially if you are new. If you're new, be prepared for some constructive criticism and be open to the feedback and improve and get better from it. Because when Joseph and I started, we thought we had a smoking hot deal, guys. Seller finance. We were like, yeah, let's do 60-40, 60% us, 40% to the investors. And boy, did we get a freaking shock when we talked to those investors. We definitely had the wrong structure, and they gave us some super constructive criticism. But you know what? We didn't let that bring us down, right? We took it as feedback, and we got better, and we restructured the deal where we knew that it made sense for the investors. Remember, if you're going to be talking to investors and raising capital, you're asking them to put money into the deal. Be prepared for them to ask you questions. It is completely fair for them to vet you just as much as you're vetting them. Because remember, you're asking them to invest in your deal. They have every right to ask you every question. And also be prepared for some tough questions that you may not even know are coming your way. Like it's you're asking them to put X amount in your deal. Be prepared for them to ask you how much are you putting into your own deal. And if your answer is like or nothing, then that kind of shows them that if you yourself, if you're capable, if you yourself aren't able to put money into your own deal and you're asking for someone else to do it, then the kind of a reflection of how confident are you really in your deal, right? And yeah, Christy, she nailed it. If someone ever asked me, which is true, how much would I put in my own deal? I put everything I've got into this deal, including Joseph's $5 that's sitting right there.
Everything I got. It's all going in there.
And then the vendors, ensure you're keeping track of all the reports as they come in, guys. Third-party reports, inspections, appraisals, phase one, environmental, all these reports that are coming in, just make sure that you also review them, guys. Don't just have them there and be like, yeah, I got it. Review them too, guys, and understand what you're looking at, because this is also going to provide more confidence to you when you're talking to your investors. You'll be able to tell them everything that you guys found. You can be proactive in telling them everything that you found and what you're doing to mitigate those risks in order for them to just feel more comfortable. And also, you want to cover everything so that the point is, when you're talking to them, you've covered everything so that they don't have any questions for you, and you seem very knowledgeable. So understand what those reports that you're getting back are telling you. And if you don't know, ask the vendor themselves to go and walk it through you. Because remember, you're paying for those reports. These are upfront costs. So you have every right to ask those vendors, what the heck am I looking at? Right. And with all this being said, guys, your PSA, so when you are supposed to wire EMD, let's say you have a PSA and you're supposed to wire EMD, just make sure that you're reading the purchase and sale agreement and you're going over it with your attorney, because there could be some clauses in there that you may not have caught the first time, or you should be aware of, because let's say you have X amount of days to wire the EMD. And if you have not wired that EMD, then the contract is voided, right? Typically, it's anywhere from 3 to 5 that we've seen business days that you should wire the EMD. And the broker, if there's a broker, they won't let you forget because they want that EMD wired.
You'll get a message every day.
Yeah, exactly. So just make sure that you're on top of that. Also, if there's any clauses in there, which there probably will be for the due diligence materials, make sure that you understand what exactly the seller is supposed to be sending you. Also, any extensions that you have negotiated, that they're in there. Know when that EMD, if any, when it goes non-refundable. So if that's like, after your due diligence, when that actual time frame looks like. Know the financing contingencies, if any, as well. If there's anything that has to do with the lender or you not getting loan approval, that there's a contingency and you know what will happen if you don't do that. Other contingency clauses like your critical dates checklist. If for whatever reason you are supposed to give them like a written notice that you are proceeding with the deal like halfway through the due diligence and you don't do that, then technically you might be breaching the contract, and then your due diligence goes hard or non-refundable. So make sure that you are on top of everything in your due diligence and in your purchase and sale agreement. The attorney can help you through all this. Normally they do, but just one of those items that maybe they I wouldn't say sneak in, but maybe you missed, or because you should have read it along with your attorney, can mean that your EMD will be considered non-refundable or something else. So just make sure that you're on top of the purchase and sell agreement. Look through all of it, be on top of everything. And remember, this whole due diligence overview that you're seeing right now in front of you, this is what you guys will be typically coordinating with these people right here. And I may be missing one or two other ones, but this is the people that you're typically going to be coordinating with as part of your team or just in general. Do you want to add anything on that, Joseph?
No, I think you covered pretty much everything. No.
Okay.
I'm good. I'm good. I'm just happy to be here.
All right, guys, we're approaching the Q&A here soon, but was this helpful? Like, are you guys learning anything? Can you let me know in the chat with some fires or something?
Guys, this is Oscar's favorite topic. I don't know if you guys could tell or not, but this is what he loves. He loves this stuff. So support my boy. Come on.
Yes, thanks, guys.
Yeah, we appreciate you guys.
Yeah,
I'm just having a good time. I just like to joke around because
and
what's
it may
life if you can't have fun with it?
yeah, and it may not seem like I kind of ran through these slides pretty quickly, but Joseph and I were working on this last night to make sure that you guys are going to get the best out of it. Guys, if you thought this was helpful, if you thought this was of value, shout us out, follow us on Instagram. These are our handles here. I'm at the top, Ione, Joseph, KJ. Follow us, shout us out, let everybody know that you got some value, that you're in this room, that you're doing multifamily. I saw some questions about investors in the chat. If you guys are raising capital, this is the best way to put yourself out there by letting those people know that you are in these rooms learning multifamily, due diligence, everything, so that you get more exposure and you get your name out there. So make sure you're posting on social media what you're doing, what you're learning, especially if you are the one raising capital in your team. Just going to quickly touch up on this again. $1 Million VIPs. It's an exclusive group. We've got a bunch of VIPs in the chat, guys. I think I see Cecilia, Christy, Max. I think I saw Lars in there. Guys, these are VIPs. These are people who invested in themselves to be part of our exclusive VIP group. They are amazing, amazing underwriters. They know how to underwrite. They know how to do market analysis. They know what's going on with the markets. They're talking about deals that when they first started, they didn't know what the heck they're doing. Now they're talking about like 10 million plus deals with like 100 plus doors. I mean, these people have transformed big time. If you are a VIP, put a 1 in the chat, guys. Let everybody know that you're here. And if anybody is not a VIP and you just need someone to squat up with to maybe take a look at your deals, or maybe you're looking to somehow get started, reach out to them. They are amazing. They can help you out. They have so much value, so much knowledge. And also, if you are interested in joining the VIP team, talk to one of the VIPs. Don't talk to me or Joseph. Talk to one of the VIPs. Let them know that you're interested. They will tell you all about it. Joseph made a great point last time. It's like, if I were joining a group, I wouldn't necessarily talk to the person I would who is in charge of it, but I would also ask around to see what they think. These people are completely honest. They will tell you everything about the program. I hope they're honest and they'll tell you everything. But yeah, just reach out to them. They also have, they can get you access into the group as well. VIPs, by the way, Ione is almost ready. So you guys be prepared. It's almost ready. And you guys know what I'm talking about.
They've been waiting. They've been waiting for it.
Absolutely. All right. Q&A. We're here, guys. Due diligence. Pick my brain, guys. This is everything that you need to know for the due diligence. This is the first time we've covered this topic in detail for you guys, and it's all for free. So if you guys have any questions, ask away. Raise your hand. We'll bring you on stage. I thought I saw one in the chat, so let me go back while you guys raise your hands. But Kim was asking, do you provide investors with actual reports if they ask? I wouldn't unless you really want to, but I would just cover that myself whenever I'm talking to them personally. And that all depends too, Kim, on with your attorney, with your securities attorney, what it is that you're going to be filing for as far as like if you're syndicating the deal, right? if you're going to be doing the 506B or 506C, you strategize with your attorney if you are syndicating to see what filing is going to be best for you so that you can start talking to your investors. And that will be also part of the due diligence and your partner's collective decision with your attorney to figure out what filing is best for you guys. But I would not share the report unless they absolutely wanted to see it. Most investors that we've talked to, Kim, they just want the high level stuff and they want to know that their money's going to be safe. And more importantly, they want to invest with people they know, like, and trust, right? Of course, they want a good deal, but they won't invest with someone that they don't like, they don't trust. They'll just move on. So unless you have like I would also say this, if you are if you are going to be presenting something to an investor, again, talk to your attorney. We're not attorneys, guys. Just make sure you do your own due diligence. But if you're going to be presenting something to your investor, uh, personally, I wouldn't like to see like a 40, 50 page presentation. You put me to sleep and I'd lose interest. So, just for us, it short and simple works. I have seen some very, very long presentations, and, to each their own. I'm not frowning against it. I'm just saying, for me personally, I give this analogy all the time. If I'm going to go out and eat at a restaurant and the menu's nothing but words, you've lost me. Like, I need pictures in there. I need a coloring book or something. you know, like, I need to be able to see the pictures because I'm a very visual person. So I'm just letting you know, most investors are the same way.
I wanted to touch on what you said about they people invest with who they like and trust. That's literally any time that we secure money or get private money for even a single family home or multifamily, whatever it is, they always tell us it's because I trust you guys. Yeah, I trust you guys. Let's just do it. I trust you. Let's just do it. Every single time they always say that. So that is 100% why they do it. Yeah, yeah, the deal sounds good. It's a good investment, but everybody, I mean, I wouldn't say everybody. There's a lot of good deals out there. You just have to go find them and know the people. The reason they pick you over others, even if yours is not as strong of returns, they're going to invest with you because they like, know, and trust you. That's the reason they invest ultimately. For any investment, people invest with people they trust. That's it.
Yep, exactly.
And I like
Um,
what Christy said here in the chat. She said this due diligence list is also a great reference for everyone to incorporate into their pro forma, a reminder to budget for all of these third-party reports and fees.
yeah. Christy, we learned that the hard way when we first started multifamily, but these upfront costs and third party reports. If you're in single family, you do like your appraisal, your survey on a single family home, then maybe you might be looking at $1,000 for both of those reports, maybe less. It just depends on who you go with. But when you're starting to do commercial multifamily, and say you're going to do a survey or you're going to do appraisal, your property condition reports, you're going to be doing your phase one environmental, those can add up really quick. I mean, just the survey alone can be anywhere from like $1,000 to like $3,000 or more on just a survey. And then the property condition report, we've done one where it's like 4,000 plus, or I think the one of them I think I saw was like 6,000 plus on just that one. So these reports can definitely range, you can add up real quick. I mean, just in those two right there, you're close to 10,000, if not more already. So what I mean by prepare yourselves for the risk capital is during that pre-due diligence that I talked about, start getting ideas of what that's going to look like. Because if you don't have that money up front, then it's going to be tough for you. Either you're going to have to figure something out creatively, or just somehow get it done, right? So just be prepared for those upfront costs. And I wish someone would have taught us that when we first started, because everyone always talks about they've done their first deal, and some of them will even say no money out of their own pocket, which is true. You can do that, but I'm just saying, know what you're looking at when you're going to do these deals. And those third party reports are just the tip of the iceberg. You still have the attorney fees on top of that. And those attorney fees can also range from, I need a retainer up front, or it could be an hourly service, or it could be flat fees. All these things add up. And then also on top of that, the lender fees are something else that are upfront that I didn't know. I thought they were going to be taken out at closing, right? But it's upfront. So you have to make sure that you know what that lender fee is going to look like, because that's the process for them to get started, right? All the paperwork that's involved with the lender too. It's, if you guys have bought a single family home with a lender, it's very similar, but it's more extensive because the lender's a lot more involved in commercial multifamily. So you have a lot of paperwork to do, and you have to make sure you're on top of it. And just like in single family, you think you're done with the paperwork, and then like maybe a couple weeks before you're supposed to close, they want it again, right?
Mhm.
So, just make sure that you have that prepared, because they're going to want to see, depending on how long your closing period is, they're going to want to update that and underwrite it again. So it's very tedious. It could be stressful. That's why I said be proactive in knowing what it is that you're looking at. Also, the property management company, I touched up on this, but just make sure that you know the fee structure for them and if they're expecting any compensation out the jump. I mean, they can do things for you. They can help coordinate. Some property management companies will say, "Hey, I'll do this for you, but you'll have to pay me an hourly fee to do it." It's out of my scope. I don't typically do this, but I will accept some sort of compensation for it. Just make sure that you know what that's going to look like as well, right? You don't want to go talk to a property management company, get really far into the process, and then, oops, we forgot to talk about some sort of magical fee that just appeared, right? Then that's a tough conversation you have to have. The other thing with the partners, I mentioned this before, make sure that you talk to your partners up front. I cannot stress that enough. I would definitely say have that conversation sooner the better. Uh, we learned that the hard way too.
Feel like on every deal.
Yeah. Every deal's different. Every deal's
It took,
different.
took us a couple times to learn that one.
Yeah, you want the best for everyone. You really do, right? And so, it's some things that you learn life. That's all that happens, but it makes you better. Um, but anybody have any questions at all? I mean, favorite topic here.
Yeah, this is the opportunity, guys. This is the opportunity for sure. Because as soon as we hop off of this, we're just gonna be busy the rest of the day.
Yeah.
I know we have a call scheduled, and then I have to go look at a property today too.
Yeah.
Oh, that's a good question. You see Max's question?
Yeah. Max is asking, what does a typical GP table look like? Good question, Max. Depending on how many partners you have, it's going to be all based on the roles. And I think, Joseph, maybe you can touch up on like, I think the 4 or 5 roles that, typically what you see in your GP model.
Yeah, honestly, I could just show one
Okay.
if you're okay with that.
Yeah. As long as no proprietary information is on.
Yeah, no. This is just a template. But hang on, give me 1 second. I'm gonna delete a bunch of information off this template, and I'll get right back to you.
Yeah. Yeah. No, you're good. So this, for those of you who don't know what Max is talking about, when you do a syndication model, like a general partner, limited partner structure, depending on how you structure it, right? The GPs take the lesser of the percentage, right? Typically, you'll see like a 70-30 or 80-20 split. Your 80% would go to the limited partners, and the 20% would go to the general partners, or the 70% would go to the limited partners and the 30% would go to the general partners. General partners are the ones who are operating the deal. They're the ones doing everything, the day-to-day, the asset management, the investor relations, all the stuff prior to that, like the due diligence, closing, all the sweat equity. That's what the general partners are doing. So during that, depending on how many partners you have, you will split everything accordingly to percentages. And Joseph will show you exactly what we mean here in a second, Max,
Yeah, I'm
on how
ready.
it's split.
Here we go. So there's a whole bunch of templates out there. This is just one template that we have. I know we've seen at least 4 different ones. But yeah, this is kind of what one looks like, right? And we'll go through it. So you would put all the different partners, entities, or individuals, whatever it is. This row is the percent of GP. This is the percent of deal ownership, right? So let's say this is a 70-30 model, right? Deal GP percentage, 30%. So this says that this partner one has 71% of the GP, which is 30% total. So collect that equates to 21.3% of the whole deal equity. So 71% of the GP valued at 30% is 21% of the whole deal ownership. So they would own 21.3% of that building, this person, that partner. And then this, so on and so forth. This is 29% of the GP, they own 8.7%. So this one is broken out into 5 categories. I've seen one as simple as 4 categories, and they do 30, 30, 30, and 10. So it's flexible on how you want to structure it, but this is just a generalization. And honestly, we like this one, so we kind of just stick with this and adjust accordingly on each deal that we do. So the first section, sourcing, contracting, closing, that's basically everything that we've covered so far. That's what this is. That whole everything in this series that we've done so far is this section. We haven't even touched the other sections at all yet. I mean, we kind of touched a little on risk capital. So that's what this is, right? And then you would just say, okay, that person's going to get 70% of that, or maybe they'll get 50% of that, and it changes the rest of it, right? So put that back. Risk capital, that's your EMD and all of the due diligence expenses that Oscar just went over and covered. This is all of your upfront costs that you have to pay before the deal closes. This person is right here. And this is a little higher. Typically we drop that down to 10%. Key principal or the guarantor or balance sheet guarantor, whatever, sponsor, whatever you want to call it. This is the person that they're just coming in, signing the loan. They're the person that their name's going to be on the loan, and they're going to get some equity for that. Property and asset management. Now, it says property and asset management. Ultimately, this is the asset management column, right? The property manager is not getting equity in the deal unless for whatever reason you structure it that way, but it doesn't make sense. This is all of the asset management responsibilities. That's looking at over the financials, that's investor relations, that's doing the actual asset management, that's doing the construction or the renovation of the property. Anything that has to do with after the fact managing the asset, that's in this column. And that one typically has a whole bunch more sub roles in that column. Then there's raising capital, and each party or partner is going to get a certain percentage on for raising capital. They're going to be specified to go and everyone should be raising capital, everybody. And then that's where you designate who's getting what for raising capital.
Right. And then remember, guys, when you're talking about raising capital, talk to the attorney. Just raising capital by itself is not a role. Typically the capital raisers will also have a part of the asset management, because they will also have to do the investor relations after it's closed, right? So make sure you're talking to your attorney. Someone cannot just be on the deal because they raise the capital and then see you later. Right. So just make sure you talk to an attorney on that.
Exactly. So that's that. I hope that helps a little bit. And again, this is just a template. You can change all these percentages, right? We could change that to 10 and put this one at 30, which is what we typically do anyways. So that's a way you can structure that.
That help out, Max? Thank you, Natalie. Cool. All right. Well, you guys, one last time, does anybody have any other questions that they want to ask, either in the chat or raise your hand? We'll bring you up. Thanks, Christy.
You're the best too, Christy.
Shout out to Catherine, by the way. Catherine's amazing. She's awesome at underwriting too. She's been learning a lot, and she's taken action to become better. So definitely reach out to Catherine too. She is an amazing person. Thanks, Ryan. That's our goal, man. What do we call it today, Joseph? I think we're gonna deem it Nugget Fridays.
I like that.
All right, Alan has a question.
Let's get out. There it goes.
Hey guys, how you doing?
Pretty good. How are you, Alan?
Good, good. Thanks again for today. Appreciate it, just like always. Um, this may be a little off topic, and I might have asked before, but just to double check. When someone's thinking of getting into the space, when we're talking above the 1 to 4 family, uh, multifamily properties, what's the what do you recommend is the best initial sweet spot to go after? I know the go big or go home philosophy. But what do the two of you like, especially for somebody that's thinking of transitioning from single family wholesaling or 1 to 4 family wholesaling into this realm?
Good question. Um, the pro
Even if it's a stepping stone sort of thing.
Yeah, yeah, for sure. And I think that kind of goes back to like if you had asked me that maybe a couple months ago, I would say go big or go bigger. But I mean, I still believe in that. I'm just saying that if if you're looking at a smaller multifamily, that's still okay. Like, don't let some of these people tell you that you have to go out and get your first 100 unit property just because you have to. I mean,
Hmm.
I think if I were new and if I was just starting into multifamily, just getting into multifamily, that would be an accomplishment in itself, even if it was like a smaller 10 unit or 20 unit, right? As long as you're doing something in order for you to get to that point, then that's completely okay, 100% okay. Now, if your deal just happened to be like a 30 or 40 or maybe even 100 unit plus, Alan, then props to you, man. That's awesome. Because I will say this too, the same amount of effort and time and energy that you do in a smaller multifamily is the same amount of energy and time and whatever it's going to take for you to close a bigger multifamily.
Okay,
So
I think I've heard you say that before. That's right. Yep.
yeah, yeah, and it's completely true. I mean, right now we're working on a 38 unit in Houston right now, and it's the same effort that we would do for any other deal, even bigger.
Hmm.
I would argue that, you could do more, or you could do, yeah, you can do a bigger deal with the same amount of effort, but that's okay, as long as you're doing a deal, it doesn't matter. It does not matter. So if you're doing a 10 unit, be proud of it. If you're doing a 5 unit, be proud of it. If you do a 20 unit, be extremely proud that at least you're taking action. So I would
Okay.
say do that and get your feet wet. Once you start doing that, the floodgates will start to open for you and you'll understand what it takes to close a deal, and then you'll be much more confident doing anything bigger than that.
Okay. Thanks.
And
Do you
I just want
find
to
your
add, I just
Yeah,
want to
go
add
ahead.
to that that you're going to get different answers from different people. Like you got the answer from us, and I totally agree with everything Oscar said. We like the go big or go home model, or go big or go bigger, right? That's definitely how we want to operate with a
Hmm.
minimum of 40 plus. But as you see, we're doing a 38 and we have a 30. So it's not like it's set in stone, right? And I like what Flex, my boy Flex Lopez just said. It's the experience. That's what you're doing, and that's also what Oscar just said. So you're gonna have the people that say, "I want 50 or more. I want 100 or more only," and then you have the people like, "No, start with a 5 to 15." I just listened to someone the other day that they said the sweet spot for a beginner is a 16 to 32. Like it's all over the place, man. It's really just ultimately what you're comfortable with, who you have in your court. Like if it's just you, maybe it is a better decision to start with something a little smaller. Like you don't know any other people, start looking for things that are smaller and then reaching out to those people, making connections that can help pull you up, that can help pull you up to the next step, even though you're searching for something that they may not be looking for. Maybe they have the connection that can help you out with it, right? You never know who you're talking to. And ultimately, I kind of went in a circle there, but the goal should just be exactly what Oscar and Felix just said, is to learn, get the experience, take that next step, and then move on, right? You're not going to hold these smaller ones forever. I mean, ideally, you might, but ideally, you would be flipping them relatively quick, like 3 to 7 years. and then move on and grow into something bigger. Right. So it's whatever you're comfortable with is honestly the answer. But you also want to put yourself a little bit into that position where you're uncomfortable. Just above your comfortability point, you want to put something that scares you a little bit and push for that.
Okay, thanks. I suppose a lot of it has to do with where private money needs to become some sort of a syndication deal, because once you're dealing with too large a property, you can't just do it with your normal, 1 to 4 family private money sources, I suppose. You have to step up when it comes to financing.
Yeah, I mean, I guess that would be one barrier, one of the barriers of entry. There's all kinds, right? Because you also want to have that experience to take on the asset, right? Even though it's the same process, managing a 10 unit versus a 100 unit, it's definitely a bigger animal, and it's safer with the larger ones, but it's easier to come back on the smaller ones.
Yeah,
If that
definitely.
makes sense.
And then also on the financing part, right? It's, yeah, you might not be able to have that private money who always funds your deals or whatever with the larger one. You may have to go out and venture to the syndication model. And yeah, you're 100% correct. It just depends on the underwriting and your exit strategy for that particular deal. We like to approach it that way just because that's our model. It doesn't mean that's always our model, because we do seller finance deals where it may not require syndication, right? But it just depends on the specific deal itself. And also, I think I've touched on this before, Alan. The reason why we shoot for the 40 plus, for us specifically, I'm not saying that you should do the same, but for our business model is that we don't want to be the ones managing the property ourselves, right? We don't want a full-time job. We don't want to
Right.
answer the phones whenever someone's toilet breaks or whatever. I'll preach
Right.
that all day. I really want to scale, and we have a goal to hit. So again, that's our business model, but it's not to frown upon anybody else's here. If you want to just get your feet wet and you want to do a smaller multifamily deal, by all means, just get it done. Take action. Improve upon what you haven't before and grow. And then after that, you'll start to see how you can scale the business more. But just take action. That's what I would say.
Okay, great. Yeah, I know you've said you like visiting the property initially when you're putting the deal together, but you don't want to be visiting it every month, especially if it's far away. So you want local boots on the ground and local management to take care of it. So
Exactly.
great. Yeah, thanks very much, guys. Appreciate it.
For
Yeah.
sure.
Thanks for the question. Thanks for being here.
Mhm.
All right. Anybody else have a question? Going once, going twice, and sold.
Sold to the man with a gun in the background.
That's not a gun, bro. That's a baseball bat. It's just designed to look that way.
It's a very creative bat.
I'll leave you guys with this. I thought I had like the most patriotic looking background, and then I was watching the Zoom last night, and I saw someone, I don't know who they are. I just saw their background and they had more flags and stuff behind them than I did. And I was like, oh, damn. I thought mine was a little much. And the reason, guys, is my dad he's got so much stuff. I swear, every time he comes over, he brings me another flag or another one of these signs or things like that, like these pictures, the gun, like, oh, he's just always just giving me stuff. So every time I get something, I just put it on the wall. Best place to put it. But yeah, that's what I'll leave you guys with. Announcements. Do we have any announcements?
Yes, VIPs, we will have an announcement for you guys very soon. 2 announcements. So be on the lookout. If you're interested in becoming a VIP, again, reach out to any of the VIPs who are in the chat. Again, VIPs, put a 1 in the chat. I see Cecilia, Christy, Max, Lars. Reach out to any of them who are putting a 1 in the chat if you're interested in becoming a VIP, and talk to them, and they'll tell you all about it.